The euro rises as Germany's top court announced it won't delay a ruling on the country's role in the permanent bailout fund. Investors prepare for the expected launch of Apple's iPhone 5 Wednesday evening. And don't forget, we'll hear from Ben Bernanke and the Fed after their policy meeting on Thursday. I'm Brittany Umar, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with theStreet, and together we bring you the morning call. Futures are up this morning after a bit of corrective action yesterday. Scott, do you think the action that we saw yesterday was healthy?
Yes, at this point I think it was very healthy. You had a slight pullback, yes, a bit more of a pullback in tech or in high beta land, but overall we were very overbought. We've had a really good move since June 4th lows. We've had an extended move since the August 3rd, powerful up jobs day, and then recently last Thursday we broke out, two new highs. So a down day is definitely necessary to back up the truck, to let some guys in. The question is, what type of digestion and what kind of speed are we going to have moving forward?
Now, what would get you concerned? What would be signals of unhealthy action?
Well, let's take a look at the chart of the S&P, and I'll show you some levels that I'm going to be watching. If you look here at the bigger, broader pattern here, I start to show you guys the bigger head and shoulders, not head and shoulders, I'm sorry, cup and handle pattern, that you have this cupping action, with the bottom that was put in on June 4th, the rising uptrend of higher lows coming up to, this spot right here where we broke above last Thursday. So we did break above a key area. You remember this number right here? This was 1422. Then you remember this day when we broke above and went as high as 1426. So I said yesterday coming in, let's not chase price. Let's see if we could come in and retest this area, retest this prior resistance, which turns into support. And we haven't even done that yet. And every bear out there is calling game over. We're not even testing this, let alone, the 8/21 day moving average, which stands right around 410 to 414. So I think this is very healthy if we hold. And I also think if we come back down to this area, Brittany, you will see a lot of bears start coming out, a lot of, claws going on. I'm sure I'll have blood all over my back. But I do think that as long as we stay above, the 8/21 day moving average, which we've held since June 4th, the composure still remains to the upside.
Well, that's an important thing to talk about, especially when it comes to high beta names, which have had major runs lately, but have gotten relatively extended. So is that what you're watching when it comes to buying some of those names back?
Yes, exactly, because those are the best moving names, and those are the names that gave us the best action in August. If we take a quick look at the Qs, you will see that yesterday it was a little bit concerned that, it engulfed more of that breakout. If you look here in the Qs, it actually took back most of last Thursday. That's because you saw Apple get beat up, you saw other high beta names get a little beat up yesterday because of the size of the run. So this almost actually has is retesting this prior breakout. So for this, we're at the 8-day moving average. I would say for tech to remain very healthy and keep its leadership role, it should not get below the 21-day, which is at 67.95. So yesterday was a little bit more potent than people would like, but look at the size of the move that we've had here. So all in all, not so bad. I would say that this is, an area that's important. And if you want to have a high level stop, and if you're really in the bearish camp and you're really scared to hold stocks or you want to protect your gains, this would be your high level stop right around 67.50. But overall, I think you should be a buyer into this area, but we can measure it along the way.
And all eyes will be on Apple, especially ahead of the expected iPhone 5 launch tomorrow. A lot of selling pressure on the stock yesterday. Where's the next support level for this?
Well, it broke through the 8-day yesterday. We came in yesterday. We've been riding this Apple train for all of August, probably all of our career. But lately, we want to talk about the most recent moves, and there's been a lot of them in the last 4 weeks. So yesterday, I was like, you know what? Can we break above 682.48 and see 690, see 700 before the announcement, or is there going to be no momentum? Because if you recall, the last few days have been very choppy. We've seen some extensions in other names, and Apple's been a little bit touch and go because of the event on Wednesday. So I actually think it could be a really good opportunity because they're selling off in front of the event. So this way they'll have a very hard time doing it the day of. If you look now at the chart of Apple, you will see that, remember when they had the bad earnings and it came in? Look where we were. We were at like 570. This was your first buy price right here through 580 and change. And then from there, you've had a 100-point move. So a 100-point move in almost a month or so's time. So to not be able to break out and go is not the end of the world. Some active guys on my floor that aren't, as bullish on Apple as me actually got short. made some money right here when it couldn't get through the highs, and then added as it broke this small ascending triangle to the downside. I just lined up my longs. So at this point, I'm coming in after hours. I was a little cute. I went out flat, but I bought it below, 660 and change, or 661, because it was just trading down. I'm like, you know what? I want to buy it at the 21-day here, so I might as well get a little bit of a head start. So if you take a closer look here, this is what I will be watching, over the next day or so. One, here's your pivot. So today I think it's opening up $1 or so. So if they were to start selling Apple again and it breaks below 662, it probably could see more downside, but I do think that in order for Apple to stay healthy in this upper range, this will be a buying opportunity around 658. You can either buy it into 658, or you could wait for it to come down, maybe come back above the prior high, give us a little bit of a red dog reversal type action like we've seen a few times in this stock. So at least then you can get in, and then you know where your stop is, and then we could probably erase this line here and turn this into a nice upper channel that's just taking time to maneuver and absorb what has been a tremendous move, going all the way back. So all in all, I think it's fine. Macro investors stay the course. Active traders can be a little cute.
Now, Google is very extended from its 8 and 21-day moving averages. What type of rest could the stock use right now? What levels are you watching?
Well, the question is exactly, if you buy back too early, can you hold it if it continues to go further down? Now, this stock's been acting awesome since earnings. This, we've talked about so many times, you're probably sick of me talking about it. We had a buy price at 620, one at 645, one on the Samsung day around 660. And then recently, it got really nice momentum, through 700. So it's come a long way. You look at the chart here, it's look at from down here around 560, which was only in July, all the way up to almost 700. So if you want to take a closer look here, here's your moving averages. So yesterday, it took back all of Friday, which is okay. Here is your 8-day moving average, which it's been following for a long time now. It's following the 8-day moving average since almost July. Hasn't even touched the 21 days. So, you'll see a little bit of a character change if it does break the 8-day. But then I do think that the 21-day will be viable. That's where I'd love to be able to measure it, put on some type of swing trade for what should be a move to the historic highs here of 747 that I think does happen at some point, either in Christmas or a little after, who exactly knows. But at this point, we talked about not chasing up here, so we could buy a methodical dip, and there's your 8 and there's your 21.
Now, Amazon had a great week last week, but looked a little tired yesterday. So what levels does it need to hold to keep that momentum intact?
Same story here. Right now, Apple broke the 8-day, so you almost think to yourself, if Apple could break the 8-day, why can't Amazon or Google? Don't be too early. But sometimes if you wait to be perfect, they don't get where you want it, or they overshoot it a little bit. So with Amazon, which already has the event out of the way, it's already been methodically moving to the upside. You take a look here. We talked about buying it at 230. Remember, this 2-day move through this prior high was another nice area, and then it rode the 8-day the entire way up to, and then finally got a little aggressive once they couldn't sell it on event day. And then yesterday, small little reversal, went through the high, couldn't hold it. So here's your 8-day. Okay, actually, there's a few things going on right here. Here's your 8-day, which is around 252, and then here is where it really started to extend from. So this is the area. 246 is your 21-day, 252 is your 8-day. Those are your two momentum buybacks. And then 50 days all the way down here in a lot of these things, but that's for a macro investor to worry about, not your active intermediate trader. All
right, and we had seen some relative strength out of BIDU, but it pulled back down towards the end of the day yesterday. What's your take on action out of BIDU?
I think BIDU's been broken, and people are trying to get involved, and they're getting hurt, they're getting spun around. I would just consider it as a trading vehicle until I see something more potent. I would say just make sure not to get too involved with any type of size, because there's some problems going on there. It just looks like it just hasn't been acting well.
All right, metals also taking a break after their recent impressive move. We're going to talk about gold and silver right after the break. Stay with us.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Silver has been acting better than gold in the recent rally. Took a break yesterday. So what levels does silver need to hold up its momentum?
Silver was the first thing to go. We talked about it on August 20th, where finally I'm like, oh my goodness, we have an igniting bar. Let's go after it. Held it for like 4 days. It was a nice, powerful move. We were pleasantly surprised in August. And then we've gotten back and forth with it. And I've been actually focusing a bit more on gold because of the higher price instead of taking more size with the lower percentage type move in silver. So if you look at the chart of silver, you will see, first things first, this was the really tight pattern that we were looking at when it showed its face first. Just remember the date here. This was August 20th. August 20th, silver broke above a key level and then just continued. Then it rested a little bit right here and went again, giving you a nice additional entry above this. What was this? This was what, like 30.24. And then since then, had another move to the upside. So yesterday was one of your first days where, again, it pushed through and couldn't hold it. So I was thinking that, you perhaps it would be really crazy if it holds this upper gap here. So, with it up 20 cents, maybe it does. So if it does and flags, you're not going to really have a dip to buy. But if it does that, I'm probably just going to stay away. I was thinking more of it just like everything else, a test of the 8th day, come back down to the 31.50 area, kind of like what it did here. You had a really nice move. You had 4 downside type days, went to the 8th day and went again. I'm hoping we see something like that because if you go back to a more macro look at silver, silver still is, look where it is. It's just all the way down here. There are some bears out there saying it's still, I think it broke the trend. But there are guys, yeah, it did break the trend. This trend has been broken. The trend of high, lower high, lower high, lower high is out of the way. Sometimes, you see a big move before coming back to retest it. But at this particular point, I think that, dips are buyable. And just because something's extended doesn't mean it's a short. I know every time that gold and silver ticks down, the bears come out and say, I'm shorting more silver. Shorting the metals is probably one of the toughest areas to do, especially when they're on fire because these things move fast and furious.
So if you think the dips are buyable, now what about gold? Gold also took a break yesterday. Is this pullback buyable?
I think so as well, and I sold my gold on Friday just because of the size of the move. But what's important about gold, and to show you how you could trade sectors or groups together, I showed you on silver, August 20th is when it ignited. If you look at gold, gold really didn't ignite on August 20th. Okay, it just started to come right into the trend line right here. Look, the same thing is right there. That is August 20th. You look to the left at my little quotron there. So that's why I went long silver and also said I'm going to take some gold because they're probably going to gap it up. So meanwhile, they did gap it up, gave you a nice move. Same type of thing with silver, pulled back to the 8, almost touched the 21 day and went again. So sold into the strength there. Today, it's up a little bit. So same way with silver. If it stays above this most recent gap, you have a lot of shorts in there. You have a lot of people who said, I want to buy a dip and they're not going to be able to. So I guess once it crosses above this recent high here in the GLD, which was 169, you're going to see additional action. I'm hoping it goes sideways, and I'd love to even see it fill some of this gap, so I'd rather be a buyer here around 165. Because if you look at the macro thesis here, again, everyone's saying that this was just a correction within a major bull run, and if that's the case, you have a lot of room to the highs here. So, if you're a macro investor in gold and silver, or a macro bull, which a lot of these guys are, they're saying gold could go well north of 2,000, silver can go back above 40. I trade the intermediate trend and price action as of right now. This move was potent enough for you to stay with it, but just stay with it based on your comfort level. And right now for me, it was a nice move to the upside, took the trade. If I get another nice setup, I'll get back involved. If I don't, I'll let those guys enjoy the ride.
All right, let's do some quick hits here. Las Vegas Sands taking a break after a good run. What's the next spot to get involved here?
This is the same thing, methodical. Okay, we talked about in July, it capitulated on Twitter. I'm like, LVS on the earnings capitulated. This is a time for swing traders to buy, active investors to look at. PS, you take a look here, and this is what happened on LVS. This was that day. So this was buy number 1, had some commitment, buy number 2, flagged, another buy, flagged, another buy. So I was holding it during this time period, and I sold yesterday. So let's see if it does the same thing. It keeps flagging and going higher methodically. So let's see if it can hold below the 200-day and continue to go sideways. After a few days of proving it could stay in here, like look how many days it proved that it could hold higher. Here it proved that it could hold higher. So after a few days, I'll stay with it. Maybe I'll get in a small feeler, after another day or so, and then perhaps above, 44.70 when it goes. But right now I have no position. It's been a nice trading vehicle since the lows. You have 1, 2, 3, 4. So, the fifth time might maybe a little difficult, but I would say right now it's an avoid until we see it hold higher once again.
JP Morgan also resting. Will be back in motion anytime soon.
JP Morgan, same thing. It's like you can be constructive on prices, but you don't have to chase prices. Last week on Wednesday, I'm like, I want to be a buyer. I saw Goldman Sachs break out. So I'm like, JP Morgan's tight pattern is looking so good. I'm going to get into tier 1 and get into more once it breaks above. I think the price then was $37.50. You look at JP Morgan and you will see that was right here. Okay, nice tight pattern, got in tier 1 here, added there. You had a little follow through, sold a nice amount on this day. Yesterday I flattened out, and then all of a sudden you had a red dog reversal. Guys say, what's a red dog reversal? Well, I'll tell you right here. That's when it trades through the prior high. This one was $39.53, makes a new high. Some guys come in and chase, and then shorts get squeezed because some people have been staying short this entire move and rolling it up, which to me is dangerous. But, and then it reversed, so that's a short-term sell signal. That means it's a rest. So for me, I'd like to see if I could buy back JP Morgan a little bit closer to 38.23, the 8-day moving average, just like the thesis is buying 8 and 21s, not chasing price.
Now let's talk SodaStream. You used your tier system on this stock yesterday. What did you do yesterday and how did you prepare for today?
Well, yesterday it was a nice tight pattern. It was when the market was a little bit stronger midday. It's a very heavily shorted stock. We did the same thing with MCP. You saw GMCR. You've seen a lot of like trash for treasure trades recently where stocks that used to be momentum leaders got crushed and then they get into tight patterns. Then sometimes people looking for things to do because they made so much money on the leaders, on all the sectors that, if volume goes there, it's worth some action. So if you look here at SodaStream, you'll see what I liked about it is, you take a look here at this very, very, very tight pattern. So to me, that means, if it wants to ignite and go, I'm there. So my first buy price that I was looking at, and I think Carrie actually put it on Twitter, was right here, 39.20. And it did go as high as 40.22 before closing off with the market. So I stayed long some. I think if we see volume again, I'll be adding above yesterday's high, okay, which is right here at around 40.22. But again, this to me is not an investment, it's a trading vehicle. Yesterday, it showed decent action, not great action. I would have liked it to close stronger. But today, if it can get back above this high, it can continue. It's been really crushed, and I know all the guys love to come out and batter it and bruise it. But at this point, maybe it's a cute trade for cash flow.
Speaking of cute trades for cash flow, MCP, as you mentioned, MyCorp offered traders a quick, nice trade for cash flow yesterday. What levels does MCP need to hold to keep momentum?
Well, it's funny because everyone has different time frames. So I, on Friday, saw this perking up and I bought some. And then I said yesterday, if it gets above $12, $12.20, I'm going to buy more. And it did, or even $12.50. And then it went to $12.70, so like trade them, trail them. And then it just trickled down at the end of the day. So a trader like Mark Sperling, who's got 25 positions, he doesn't think it's a problem. He stayed with it, no big deal. For me, I've been trying to pare down some risk, and manage positions a little bit more closer. I said, you know what? I'm just, I got a nice day and a half trade, didn't make money on all my positions because I trailed some. I booked some to make money, trailed some to see if it can go higher. It closed below $12. I said, I'm done with it for now. I'll revisit. You look at the chart here, you will see, this was, if you go like right here, take this day out of the picture. This is when I thought it looked good. You have a little bit of inverted head and shoulders pattern, left shoulder, head, right shoulder, nice flag after getting absolutely annihilated. So this was my buy number 1. And then we did add as it tried to clear this 12.50. And then what happened when it got to the gap? Did it bust through it or did it get rejected by it? That's 13.49. Looks like it got rejected by it. But that's short term. Sometimes it takes a few times. So I'm not going to lose sight of it. Today, if it could hold, if it can get back above 12, maybe I'll get back into a feeler. And the next time it goes for momentum, it's going to have to clear this 12.78. And then maybe it'll have a little bit more authority or a little bit more, what's the word? I don't know. Maybe it'll fill the gap, and then there's 15 right around there.
There you go.
Yeah.
Now, what about Coors, which had been acting well, but fell 4.5% yesterday after announcing a secondary offering?
Well, there are new issues that have come public in the past year or two. They're always exciting, and they're the ones that give you unbelievable opportunity because they're innovative. They just went public. They have tighter floats. But you always have to worry about what are they going to do to get rid of some of their restricted stock. When does a secondary come? And usually when they look their best, all of a sudden you get blindsided with the secondary. And as a trader, it hurts. As an investor, just close your eyes and typically a few months later it's fine. You look at Coors right here and you will see that Stock had a spot secondary announced, and it was actually at the highs. As a trader, this is when we talked about getting involved. You had a nice gap up. It held the gap on this day, and then you had another nice flag on this day. And then I would have said people probably were trailing it. So yesterday, what happened here? Gap down, didn't break, went back to the 8-day. It's not even near the 21-day. I would say short term, as long as it holds above this 53 area, you're going to see shorter active guys stay with it. But it starts to break that, it's going to need some time to prove where it's going to hold.
So this week we have Germany Wednesday, Apple Wednesday, Fed Thursday. Where's your focus heading into trading today?
My focus is really going to be on Apple to see how it handles yesterday's low, to see if there's opportunity there. I think the banks, the casinos, the metals, they all need some time to consolidate after a really nice move. My what's concern? Not my concern. My my attention, which is not a lot today for some reason. Maybe it's because it's 9/11, and it's one of those days where you think about where you were and what you went through then, and our hearts do go out to all the families of 9/11. But as far as my attention on the market-wise, I want to see if that prior resistance turns into support. Can we hold above 1422 to 1426? If we do so, I think the market's really strong. Then once again, I'm going to have a list of all the 8/21-day moving averages and all the stocks that I trade to see if I could buy that dip to set up a bigger move come later this year.
Well said, Scott. Happy trading, everyone. Have a great Tuesday.